Let's welcome in Oliver Sloup, Blue Line Futures. Oliver, we had the weekly export sales this morning. You had a chance to go over that. We also had the estimates now that are out there, the trade estimates for next week's WASDE report. Take all of that information and plug it into where we are trading at with these markets today, and give us your thoughts. Give us a little bit of behind the scenes as to what you think is moving this market and what a producer should take a look at.
Well, we had some pretty good exports this morning, as you had mentioned, and one of the things that I was talking with clients this morning before the floor even opened is that we got to take these weekly export sales with a little bit of a grain of salt. It's not like it's hot off the presses news. This is data from January 22nd to the 28th, so it's a week to 2 weeks old, and that's why you're seeing the market not really react despite those very strong numbers. What you want to see in these weekly export numbers is this trend of higher and stronger exports, and that's what we've seen, and that's obviously been reflected in prices. Now a lot of the attention is going to be on the upcoming USDA report. I wouldn't be surprised to see some of these markets continue to just consolidate into that, and once we get through that, I think we'll probably see a bigger directional move. But right now they're just kind of sucking the volatility and premium out of the market in some of these options, specifically in soybeans. We're just trading in a pretty tight range, 20-25 cent range here in the near term, and we expect that to continue. But it's going to be very interesting. Next week, I think, could be an inflection point. A break and close below 13.35, I think, could open the door and accelerate some selling pressure via long liquidation down to that $13 handle, which would be psychologically significant. And at that point, it's going to be, I think, potentially a trend changer. We either hold that or we break down. I think the fundamental backdrop is still pretty strong in beans, so I'm not really looking for a massive fall out there. And as far as the upside goes, if we get a bullish report, we really want to see consecutive closes out above that $13.90 to psychologically $14 handle to go revisit those contract highs up at $14.36.5.
What do you feel about this average of 119 for a carryout on soybeans over here in the trade guesses?
Well, I think a lot of the bullish news has been priced into the markets over the last several months, and I think that's why you're seeing the market just consolidate here sideways. We need to continue to feed the bull, and I think that the bulls really want to see a number come in well below that to get that big next move higher, and we want to see the continued demand on a weekly basis come into the market. The bigger concern, I think, for some folks is the fact that harvest is starting in South America to ramp up a little bit, and that could potentially put a little bit of a headwind in things. The other thing that we're monitoring very closely is the strength in the U.S. dollar over the last several weeks. We've got a little bit of an inverse head and shoulders, which means that it's starting to strengthen up. That's a bullish formation. And when we look at the U.S. dollar and the grain markets, one of the higher inverse correlations to a stronger U.S. dollar is to sell wheat. So if the dollar continues to firm up, I think that could put a headwind into some of these grain markets, but most specifically Chicago wheat.